Hey, what's up guys? Today's trade was a long position on MNQ and thankfully another clean move. Let me get into the thought process and pretty much the steps we go through before entering a position and finding our short-term buys. So step one, it's always the liquidity grab, specifically overnight levels. Have it be Asia or London, it doesn't matter. We're just waiting for one side to get taken. So we get buy side on London right here at 931, and then we're pretty much looking at, is price going to expand and continue past it, or are we going to see some type of reversal? After we see one of those two, we're slowly starting to piece together a short-term trend. We're trying to put together what buyers or sellers are telling us. I'm going to tell you why we were very bullish after this sequence. So right upon opening, we have this bullish gap created. Okay, I'm not bullish yet because it's just a gap and we never know what can happen, right? Now, as we swept London high, we created a second one, okay? And then we went ahead and expanded past London high, creating a third one. So now you can kind of see the picture that's being painted. 3 bullish gaps, and more importantly, none of these gaps, price is not coming back to rebalance. It's just continuing to ignore them. It's expanding away from it. So what does that tell me? That tells me that the buyers are truly in control in the short term, and that it's a high chance the bullish trend will continue instead of seeing a crazy reversal simply based off of this right here. Let me show you one more thing. On the 30-minute time frame, I noticed that we also inversed a gap right here. And if I go back to the one, you will see that this gap right here was that 30-minute bearish gap. So we have bullish sign, we inverse a bearish gap with speed and displacement, another bullish sign, another gap. I mean, you can tell what the point I'm getting to, right? It's clearly bulls are in control, so why would we place our bets on shorts? We won't. You simply look at market structure. There was no red candle. Price was very clearly increasing, and that's it for that. So now we have our liquidity grab that happened at 931. We have an established trend that we pretty much already decided by 934. We're going to be going long. We're just looking for step 3 now, an entry model. And that came right here. Let me just clean up the chart a little bit. And then as always, if you know our entry model, it's very simple. We're either looking for price to rebalance the gap and then close in the bullish direction, or it can inverse it like it did today, close beneath the gap, and then invalidate the inversion, right? Personally, we anticipated the entry simply due to looking at price action and knowing that it was a high chance that the longs would work out. So I did get a little bit of a better entry with my anticipated price, but it's all good. With experience, you'll be able to notice over time which ones you should or shouldn't anticipate. Thankfully, today it worked out. We did go break even right after we broke this high right here at 950. Let me just put the actual, yep. As soon as we closed above it, 1007, stops break even, and we simply just let it run to our target. Now, as far as target goes, you've heard this before, our model thrives around 2R. So the fact that our price level was here, the TP, having internal highs above us hourly, made this price very high probability, because if this is draw right here and we're taking TP much earlier, that makes a higher chance that it'll get tagged. So I stick to a 2R over time, unless the market is yelling that bulls or bears are really in control, then maybe I will extend it to, a significant hourly level. But today we didn't do that, and simply that was the trade. Stop loss is usually always the nearest wick low or outside of a gap to protect ourselves. So today I saw that we had this bullish gap. We didn't have any red candles, so I simply chose this last wick here before this bullish displacement and protected the stop loss by keeping it outside of this fair value gap, right? Because if this fair value gap is truly a magnet for price may come back into this level. So we give ourselves some breathing room. And yeah, that was the trade, guys. I hope that makes sense. If you review the past videos, you'll see it's all the same thing. Liquidity grab of overnight levels. We wait for context to establish a short-term trend. Simply put our entry model, stop loss model, and then our take profit. So that's pretty much it. You guys have a great day.